I mean, everything looks really positive. There was some mention that in the fourth quarter, be careful of the growth rate. It might not be as high as the third quarter because they're lapping a very strong period from last year. But I mean, that was about the most cold water that I think you could find for something like this. It is important, and I wrote this on the blog. It's always good when you not only beat the current quarter, excuse me, the quarter you're reporting, but also forecast for the current quarter is higher than expected. I think it's particularly important for Meta because of how much they're spending on AI. You can get away with a lot of that futuristic spending if the core business is doing well. Investors have a lot less patience if the core business is struggling, and clearly that's not the case here. So I think Mark Zuckerberg has quite a bit of runway at this point.
Right, and as our Mandeep Singh mentioned earlier, comps are going to get a little bit tougher as we move along. Ed Ludlow, come on in on this. Some outperformance here, to say the least.
Yeah. Also, this is so funny because Kurt was just like, "Hey, I got to go on TV real quick. Can you handle the blog?" And I was like, "Wait, don't go." And now we're both here, and it's all falling apart. Kurt nailed it right, but I think that it's a really simple story. The businesses are really strong. That you see that in the third quarter outlook for Meta. But the one piece that's very interesting is that. They didn't raise the capital expenditures guide for the year, but they did tell us that it will grow next year, 2026. Mm-hmm. And I know that loads of people didn't have that on their bingo card. Like Meta's already being really aggressive. This is how much money we're going to spend on data centers. This is what we're going to do. But to say that next year you'll do even more at this juncture is really important. And maybe that's a part of what the market's cheering in after hours.
So this part of the story is simple to understand. One part of the story that's not simple to understand, and I pressed Dan Ives about this earlier, in our program after these numbers came out, is when these Reality Labs investments are going to start paying off. And I'm talking hardware here. I'm talking about the Ray-Ban glasses. I'm talking about whatever iteration of the face goggles we're talking about in a couple of years here. What's your view on that?
Oh, that's so interesting. So I love to use MODL Go when earnings drop because it gives you the number on a percentage basis relative to what was expected, so surprise or beat. And if you look at Reality Labs sales, actually it was pretty much the only thing that came in below consensus. But the reality is, like, it's a very nascent early days business. Meta has talked for a really long time about how surprisingly good the Ray-Ban Metas have been and how the adoption has been, but it's still young and there's a long way to go. Maybe we'll hear more about that on the call. But did you guys see this morning, Mark Zuckerberg posted a video on Instagram and also did this kind of open letter where he tried to explain superintelligence and what that actually looks like. And in conclusion, the future for Meta is AI plus augmented reality and a creator economy. And he took almost a little dig at enterprise software companies, saying that you'll move away from productivity software and move more towards things that people actually do in their daily lives, like communicate with one another. So that's the story. It's small now. It's still losing money as a unit. It's not doing much in revenue. But I think that's the modus operandi by which Meta sees us interacting with its software, with its AI models.
Whatever happened to the metaverse?
Mm-hmm. Kurt, you want to take that one?
Yeah, I was gonna say. I was like crickets over here. It's still being built. It is clearly not a priority in the way that we expected it would have been 3 or 4 years ago. I mean, it's still something they're putting money toward. They would argue that all of these devices you were just talking about, that Ed was just talking about, are relevant to that, right? So even though people aren't necessarily hanging out in this virtual world, that perhaps they will when they have the technology that it feels natural, that it doesn't feel forced. And, maybe we get there someday. But it does feel like they've really pivoted from, hey, hang out in a virtual world, to simply put an AI assistant onto your face, right? That is the thing. Like the thing you carry in your pocket right now, your smartphone that you rely on all day, every day. Imagine that, but wearing it as glasses. Yes. That is the future that Meta seems to focus on right now.
Sorry.
Yeah.
That's my own. I'm already walking. I was in the elevator. Oh, look, I was in the elevator today, coming up from the basement. And I realized when I got to the 6th floor here at Bloomberg, I was actually in the elevator with a colleague who, I would have said hi to, but my face was glued to my phone. My face is already glued to my phone. I don't,
Well, now you won't have to have your face glued to your phone because it'll be all in your glasses. So you can look up and see everybody.
That's the beauty. You can ignore people while looking right at them.
Perfect.
That's the beauty of
that's
the
great.
Wait, don't we New Yorkers already do that?
Looking forward to that.
Hey, what I just want to mention, though, we talk about Reality Labs, second quarter Reality Labs revenue, just for a little context, $370 million. That missed the street estimate of $386 million. Second quarter Reality Labs operating loss was $4.53 billion. The estimated loss was $486. I mean, advertising was $44 billion, right? So as long as like those other numbers, Ed, are living up to it, we're okay.
Yeah, and also, you know, like I've seen several analyst notes. In conclusion, they all say Meta has really knocked it out the park on every single metric. So you also got the outlook for the third quarter, which even at the midpoint of the range that they gave is well above consensus. And it's just this like equation. Do you guys remember a year ago, I would always talk about the AI money machine, like you put a load of money in, and at that time you weren't sure how much money was coming out. Well, in the case of Alphabet last week, now Meta and Microsoft as well, the capital expenditures are translating into sort of dependable top line growth. That is exceeding expectations as they go. So investors are starting to look at that and go, not only in the quarter gone did you beat above our expectations on your core businesses, but this current period, you're saying you're going to keep going. And when you have a company like Meta saying we're going to spend a lot of money and we're going to continue doing it for a long time, that's quite reassuring.